Good afternoon and welcome to another iteration of the Global Alpha podcast for this week with JT again. We've had an interesting week past and coming forward as well. We had a bit of a robust earning season from the banking sector in Europe, some good earnings there. Tech seems to be still in a sort of fragile space at the moment, a little bit of negativity last week coming out towards the end of the week. Alibaba as well, feeding into that, has announced that it's generating that new chip that may rival Nvidia. So we could see some negativity coming out for US tech there. And we saw iron ore and uranium have a bit of a push towards the end of last week.
Yeah, cool. And welcome everyone here, and thanks for having me on again there, Rich.
No problem.
Interesting week in US land. So the big news for me was on Friday. So, we're long Barlow for some clients, and they came out with a new AI chip, and it's trading 131, or it's up close to, I think it was like 10-11% on the day. So, quite a big move there for the good old Barber.
Absolutely.
And probably the other news is, what were your thoughts on the Nvidia earnings? I had a chat to Mark a lot because he had it on the call, and it looks like if they factored in the sales to China, they actually would have beat, but they chose not to because they couldn't define it. And either way, the response has been quite muted. And I'm a charts guy, and it looks like Nvidia wants to roll over at the moment. So interesting time.
Absolutely. I think how they sort of neglected to put much commentary around the H20 chips exports to China was a reason for that, as well as their guidance moving forward seems to be hampered by that.
Yeah, absolutely. So that's an interesting week. I mean, September's seasonally quite weak, so we'll talk about that a little bit later. But interesting that the largest stock in the world, which everyone's long,
Absolutely,
just couldn't make it to new highs. So US stocks this week. So this is our earnings calendar. So you can see that the stocks we're going to talk about today all have earnings. And what are your thoughts, Rich?
So Broadcom we've had on as a recommendation for clients for a while now. It's done pretty well. It's in that space that we like, which is, AI driven. So absolutely keeping a keen eye for that earnings. And following on from that, we've got Salesforce, middle of the week, major CRM operator, huge amounts of inflows over towards the end of COVID in terms of people, bringing the platform on board. So it'd be interesting to see how their earnings go. Not that we have it as a recommendation, or I don't think we have any clients holding Salesforce, but definitely watching that with a lot of curiosity. And then Zscaler, again, revisiting that cybersecurity, AI cloud security space. We have looked at it before, but didn't actually initiate. And I'm just sort of keen to see the earnings there and see if it's more robust than the last quarter.
Okay, interesting. So there you go. That's the dates there. So Zscaler, do you know if that's before or after market? I think tech's usually
generally aftermarket.
Okay, so Tuesday you got the Zscaler, Wednesday Salesforce and Broadcom on the Thursday, and it's usually aftermarket. So it's actually our Wednesday morning, our Thursday morning, our Friday morning. So keep a hold on that, and then obviously we'll have a. So US is actually on holidays tonight. It's a Labor Day holiday from
Labor Day tonight. So no execution to be done this evening. So you're waiting for Tuesday to put any trades on, and you got that earnings coming up as well. So it sort of times well.
Yeah, interesting. And then we're filming this during our ASX hours, and our market's sort of rolling over and hasn't been able to punch through that 9,000 level. So interesting if today's weakness flows onto the Europe and then onto US on Tuesday. So there you go. And so this is the S&P for the week. So you can see a very green week, which kind of makes sense. S&P did make new highs. Interestingly, the Nasdaq is the one of the more weakest in terms of the indexes, because what's actually happened over the last week is that the Dow Jones actually made new highs. Didn't make new highs, but it's actually outperforming the Nasdaq, and even the Russell, which contains all the small caps, that's actually been doing quite well. So it seems to me, and I've seen it here in Australia, is that some of the large caps, or there's a bit of rotation out of the large caps into the other ends of the market. So yeah, here we go. So it'll be interesting to see, and we have talked about it. So you wanna have a chat about the September weakness there, Richard?
Absolutely, and we've sort of been rattling the cage about this for a while now, but we traditionally see seasonal weakness in the September period. I'm sure you can see the charts on the screen at the moment. So generally speaking, you see a bit of a pullback in this month and this month only on average over the past historical period. Now, historical data isn't an indication of future events, but in saying that, it is good to be prepared for months like this. And, we saw a bit of momentum come out of the market towards the end of last month. So I think it could continue
Yeah,
into September. And if it does, have that risk mitigation plan ready to go. And any stocks that you're sort of in the money on, probably look at, trimming those back.
yeah, absolutely. So just remember that the I remember those April lows when the market looked like it was cratering. The rally from that, I just remembered the first few hundred points or first 10%. I was still convinced that it was a bear market rally, and then 2 months afterward broke out to new highs, and we haven't had a pullback since. So if there is going to be some weakness, September is generally seasonally and statistically the time it comes. So yeah, we are exercising caution here and saying starting to add to your cash reserves. So
Absolutely. And with Nvidia sort of somewhat disappointing the market, you can see that there is room for it to move on the downside.
yeah, exactly. And we talked about it last week. Basically, the market was waiting for Nvidia. If this rally does want to continue, you need Nvidia to pretty much lead the way because
Yeah, absolutely.
that's what it has been doing. For many a year, and it failed to do so. So yeah, it could trigger a bit of a. We're not saying sell everything, but just understand that statistically this is what happens this time of year, and the way things have been playing out, it's been a fairly reliable indicator, especially over the last few years. So yeah, and that's just another stat there that we see here. You can just see September quite red, and that's just the seasonal weakness in play. So yeah, just be cautious, and if it does happen, don't be surprised. I guess that's all we're saying is like, because a lot of these things, when it does happen, you're like, oh, it's so easy in hindsight, but it's just more like, when things are doing quite well, you got to just have a look over your shoulder and see where we're going and map it out. And it's always about playing scenarios in your mind. You have to, because with trading and with the markets, is never a surefire thing. It's always okay. What if something happens, and how do we plan and mitigate that risk?
Have that contingency there.
Yeah, absolutely. Cool. And yeah. So obviously the big number coming up this week is non-farm payrolls. So this is just a bit of data that we had. So in the last quarter, they revised the previous 2 months down by a total of 258,000. So what you have to remember is that whenever the non-farms beat, the markets rallied off the back of that. And then, like, if the true numbers actually came out, it would have been a big miss, and I doubt we would have got those rallies. But it looks like I think July they had a plus 73. I didn't actually look what the consensus is for the September number,
Mhm.
but I just think either way, if there's a big miss in either direction, it could be the trigger for a bit of a profit taking part of this year. So here we go, and then there you go, and that's it for our sort of last slide. You want to have a chat about some of the most recent recs there, Rich?
Absolutely. So we've got our open recommendations towards the top there. A lot of them have been doing well. We've got a few that are behind, but we're keeping an eye on them. We're staying nimble. We're not too concerned about any of them at this point in time. Things can change day to day, but right now, pretty happy with all the open positions. Going to see some gains had in Barber this week, which is really good for that position. I think I saw this morning or a couple of hours ago in Hong Kong session, it's up to 19%. So if we see that robust move there, we could see that position really moving up on that return there. And we've got various others that we put out over the period that are still open.
So just curious, I didn't actually read into that Alibaba AI chip, but it feels like this could be like that kind of DeepSeek moment. So I remember when earlier on in the year, DeepSeek came out and they said, rather than spending billions of dollars training their models, they trained their model on, I think it was like $90 million, or I forget the actual number, but it was much less than what the US counterparts have done. So it could be a similar situation here where, Chinese tech has said, okay, well, US, this is, your iteration. This is what we've come up with, and it'll surprise the market. And that's why Barber's done very well.
Sorry.
No, you can go.
I do recall that with DeepSeek, and I remember the market having quite a knee-jerk reaction initially. Do you think that we saw the market, have come strength to strength to strength since that announcement with DeepSeek in the past? Do you think that had a material impact overall, or?
No, actually, that's a good point. So I thought when I first initially, saw the news, I'm like, oh, this is a mic drop moment. Because what it essentially did was, rather than justifying all the billions that were spent on AI, it basically came in and said, okay, well, we can do it much cheaper, which is China's model. And I thought that would actually hurt the AI chips, but no, it hasn't hurt them at all. Nvidia's at new all-time highs.
Absolutely.
Just in the most recent earnings, Google's at new highs. Microsoft made new highs. So yeah, basically, you can just see Tesla recover as well. So it has not hurt the hyperscalers or the AI as much as I thought it would be initially. And it just shows the robustness, or maybe how early we are in this whole sort of game-changing technology. And just on that as well, with these sort of Mag 7 stocks just heading off to new highs, it's just a matter of there is a lot of value within the Asia Mag 7 at this stage as well. So that's why Barber's going to be up 20%. But if you look at how big they are compared to the size of the Mag 7, it's still quite small. So there could still be plenty more upside for any other hyperscalers that have some sort of exposure within AI as well. So that could be something to have a think about. And then you might want to chat about our webinar tomorrow there, Rich.
Absolutely. So we're doing a hyperscaling webinar tomorrow. I'm sure you've all received invites. I think it'll be a really good insight piece for a lot of people that are trying to understand that space and how to take advantage of various investments and approaches to it.
Yeah, absolutely. So the key with that is that if you actually register and sign up, Mark will give you 3 of his picks within the hyperscaling AI space. So yeah, tune in or at least register, and you'll get a replay.
Absolutely, and I think people should just stay cautious around the September period, as we mentioned earlier. Just be.
Yep. Well, looks like Richard just dropped off there. So thanks a lot, everybody, for tuning in. And as Richard said, it is September, so stay on your toes. Thank you very much. Bye.
General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.